Everyone, welcome to Offices Center 24/7. My name is Soumya Prakash, and today again we are coming up with this another unit, which is Unit 25, Types of Collateral and Their Characteristic of Module B of Principles and Practices of Banking. As you all know that this is the series called Champion Series, where we are bringing you unit-wise your JIB subjects. Please share the link of this video with all your friends and colleagues on Facebook, WhatsApp, or Telegram group so that they also come to know that we are doing this series. And you will get to know what you have to study for your JIB exams and what kind of questions you can expect in your exams. So let's start today's topic. So this is again a very important topic in advances, that what are the different type of collateral and their characteristics. So first of all, we must understand that we give loans. It can be divided into two parts or two types. It could be secured or it could be unsecured. So secured loans are where we have taken security. Unsecured are loans where we have not taken any security. And example for unsecured loans is, one of the example is personal loan. We usually don't take any security in it. We might take third party guarantee, but in some of the cases we also do loan without taking any third party guarantee, or personal loan, pension loans. These are unsecured loans. We also have secured loans, like example home loan or car loan. In home loan, the security will be the home for which we are giving the loan, and in car loan, car itself will be the security for the bank. We will hypothecate the vehicle. So these are two types of loans. It can be, in previous units we have seen that loan can be of different types based on security. It could be secured or unsecured. So what kind of securities we usually take? So first is the land and building. We all know that we take property, whether it is land or building or a combination of both, that is the land as well as the building on it. Second is goods. Third is we also give loan where we take insurance as security. Fourth, we have against shares. Five is where we take loan against debentures. Sixth is loan against book debts. Seven, we give loan against term deposit, that is we take FD as the security. Eighth is gold ornaments, where we take gold as security. And then we have supply bills. We take some of the bills, the receipt of the bills as security. And 10th is vehicle finance. So all kind of vehicles, whether it is a two-wheeler, four-wheeler, bank provide loan for new vehicles also and old vehicle also. So in both the cases, we will take vehicle as the security. So these are the main kinds of security which we usually take for securing our loan. So what is a security? How would you define it as that? What is a security? Bank finance is used by borrower for creation of some type of asset. We are giving loan, some kind of asset is being created, and either for it is business or for personal use. If it is retail loan like home loan, car loan, then a securities asset is being created. Like in home loan, home is being created. In car loan, the vehicle is the asset for which we will be using for the personal use. Even for businesses, when we give loan to the customer or the borrower for acquiring plant and machinery or any kind of equipment, or we are giving loans for setting up their factories. So these help the businesses to create asset. Whatever asset whatever asset is being created from the bank finance, that will be invariably taken as security, and this will be known as primary security. So this is called primary security, the security for which the asset is created out of the bank finance, that will be known as primary security. Then we have collateral security. So often banks call for any other asset owned by borrower or third party as collateral security. We can also call it as secondary security. So these are additional security which we take from the customers to safeguard our loan, because it may happen that when you have given the loan to the customer, they might be having very good reputation, they might be having very good income from the businesses, or they might be earning salary, but because you give loan for a very long period of time, maybe say for 5 years, 10 years, 15 years, 20 years, and we give loan till up to 30 years. So in 30 years, you never know what could go wrong. The customer might lose his job, or there could be other financial problems in the family, and because of that the customer is not able to repay the loan. In that case, what happens is bank will use this security, it will dispose of that security by selling it through auction or taking the help of court, and it will try to recover the money from the borrower. So next comes is, what are the effectiveness of securities? What effectiveness should we expect from the securities which we are taking from the customer? First is that there should be a good title to the security. Good title to the security means that the ownership should lie with the customer himself to whom we are giving the loan. Second is, asset should be easily identifiable. You should be able to identify that which asset we are taking as security. That is again is very important, because when you have to go to sell it, you should be able to know which property or which asset has to be disposed of. Next is, security should be easily and freely transferable. If it is not easily and freely transferable, it will become difficult for the bank to sell it in the market and to recover its dues. Next, next is, it should have not have any encumbrance or liability attached. Example, partly paid shares. So if it is a paid shares, there is not the whole ownership. So there could be any of the losses to the bank, or if there is a property where there is some encumbrance, then that might go to court. It will take a lot of time to get it cleared from the court, and it can lead to loss to the bank. The ownership of asset should be absolute. It should be very clear that ownership lies with the borrower himself. Security should be easily marketable. Asset without wide price fluctuations are preferable. Those securities which are um, which can fluctuate a lot, it will become very difficult for the banks. Example could be shares. Example, although we take shares as security, but we have to ensure that we will keep enough margin that bank should not lose in the case if market declines. And bank will also try to hedge all those risks. Bank, the market value should be easily ascertainable. It is easy to know what is the market value of the security which we are taking as security for securing our loan, because bank will be able to understand that how much of our loan is covered through the security. So it will do the provisioning, it will keep the capital based on how much the security is covering the loan. And it should be possible to store security in secured manner in case of pledge, particularly because in pledge ownership is with the bank, and it is the duty of the bank to keep it very safely. That is why it is important that it should be possible to store it in security. And security should be durable for a reasonable period of time. It should not perish, it should not deteriorate. Otherwise, again, bank will incur losses. So these are securities can be broadly divided into these four types. One is immovable property. Example of immovable assets are land, building. Movable assets are stocks, vehicles. So these are movable assets. Actionable claim is insurance. And financial assets could be shares or debentures. Then we have intangible assets, copyrights. It could be copyrights, it could be patent. So these are example of intangible assets. Now let's see what are the features of land and building which we take as security. This type of security is not of self-liquidating nature. It will not self-liquidate as in the case of stock. It will be sold out, the stock will be sold out. So it will be converted into cash subsequently because it has the property of self-liquidating. Self-liquidating will happen in the course of business itself, that it will be sold out and it will be converted into cash. Next is, in the event the bank decides to sell property, it needs to do so through the legal process. So in most of the cases, we have to take the legal course. In some of the cases, like example is SAFESI Act, where we don't need to go through the legal process. We don't have to, there is no intervention of the court, although the legal process has to be maintained. But we don't have to go to the court for liquidating the asset. In case of SAFESI Act, advantage is its value. Land and building, usually it generally increases with time and it cannot be moved and hence is always traceable, making it easier to get hold of. It cannot be moved, it cannot be sold, it cannot be um, stolen away. So these are the advantages of taking land and building as security. What are the disadvantages? Disadvantages, sometimes the valuation is difficult. That how would you valuate the property? Second is ascertaining the title of the owner. If the property is very old and has been, there is a long chain of titles has been divided multiple of times, then it becomes difficult to understand the title of the owner. For valuation, takes the help of empaneled valuers. They could be engineers or architect. For title of the owner, we take the help of empaneled advocate to search, to bring out the search of the property. It could be for 15 years to 30 years, depending on how much loan we are giving and what kind of risk we are uh, is expected from that particular loan. Then is encumbrance attachment. Encumbrance certificate is taken for 13 years that there is no claim on that particular property. Difficult to realize the security. Realize the security means selling land and property is difficult because you have to do the auction. Sometimes you don't get what you were expecting as the value. Creating a charge is costly because in that case you have to create a mortgage and it attracts stamp duty on it, and because of the stamp duty is state wise, so this also makes it costlier for creating the charge on that property, and difficult on account of Rent Control Act. If rent has been given, the property has been given on rent, then there is a Rent Control Act under which it becomes difficult for the bank to take the possession of the property. Now, nature of ownership in properties could be, it could be a free land or it could be a leasehold property. In freehold land, owner is the absolute title holder of the land, and in leasehold property, it is given for a specific period, like for it could be given for 99 years, and in freehold there is a absolute title to the customer. Now we will see that we also give loans for goods. So goods could be different kind of goods. It could be agriculture goods, it could be raw materials, semi-finished good and finished good. And depending upon what good you are taking, their features, their descriptions will be different. And so before giving loan, you have to understand what kind of business the customer is into and what will be the feature of that particular good for which you are giving the loan. Because if you are giving for agriculture products, it could be perishable item. If it is vegetable, it will perish very easily. It will deteriorate. So you have to keep in mind that you have to ensure that whatever you are taking as security, the goods which you are taking as security, you should ascertain that what kind of product it is. So characteristic could be natural durability, like chemical raw material, fruits, food grains, etc. Physical strength, glass, rubber, mica, plastic. Chemical nature, brass goods, salt, phosphorus. Utility products, upholstered furniture items, medicines, sun lotions. So these are descriptions given, examples given, and these are some of the characteristics which are given of different goods. Now, what are the disadvantages of taking goods as security? One is that it has a ready market. It is very easy to sell the product because good will be compared to land and properties. It is easy to sell goods in the market. Second is valuation is also easy. Third is tangible form of security. It is a tangible form of security. Advances for short period, we usually give loans in case of goods where we give working capital loan. Working capital is for 1 year and we have to review or renew this working capital on yearly basis. So usually the advances which are given against the goods are for very short period of time. Creating a charge on security is less costly compared to land and property, and banker acquires, again it will also attract stamp duty, but stamp duty on goods will be less than on property or the immovable assets. And sixth is banker acquires a good title to the goods. In some of the cases, especially if you are putting a charge of pledge, then ownership will come to the bank, and that is why it will make easier for the bank to make the recovery. What are the disadvantages? Disadvantages in case of goods is that it is liable to perish. It is very easier for these some of the products, not all products, that it could perish. Like in case of agriculture products especially, that there is always a chance that the product which you are taking as security could perish. Second is risk of fraud. There is always a risk of fraud in it, that customer might sell it after taking the loan without the banker's knowledge. Third is subject to wide fluctuation. The prices of some of the goods might fluctuate a lot. And fourth is for certain goods difficult to ascertain their real value. Like in the case of one example could be diamond. Because the value of diamond depends on how much cut or how much work has been done on the diamond. So not everyone will be able to identify the exact real value of that diamond, and that is why it is difficult to ascertain its real value. So let's do some questions. Which of the following is or are correct in respect to the immovable property? This type of security is of self-liquidating nature. Under the provision of SARFAESI Act, banks can sell immovable property charged to it by way of mortgage without intervention of court. All material documents of title like sale deed, gift deed, will, partition deed conveying the title to the bank will not be required by the bank. The tax receipt for the property are obtained as usually an evidence that the possession of the property is of proposed mortgager. Bank take an opinion from their panel advocate regarding the clear and good and marketable title of the proposed mortgager over the property. All are correct except 1, 2, 4 and 5, 1, 3, 1, 2 and 3, 3, 4 and 5. Which of the following is or are correct in respect to the immovable property? This type of security is of self-liquidating nature. Under the provision of SAFESI Act, banks can sell the immovable property charged to it by way of mortgage without intervention of the court. The material document of all material documents of title like the sale deed, gift deed, will, partition deed conveying the title to the borrower will not be required by the bank. The tax receipt for the property are obtainable as usually an evidence that the possession of the property is of the proposed mortgager. Banks take an opinion from their panel advocate regarding the clear, good, and marketable title of the proposed mortgager over the property. First, we'll see point wise. It is not any property is not of self-liquidating nature. This is the nature of goods, not immovable property. So this is not correct. Under provision of SAFESI Act, banks can sell immovable property charged to it by way of mortgage without intervention of the court. As I have mentioned this is correct. All material document of title like sale deed, gift deed, will, partition deed conveying title to the borrower will be required. It will be required by the bank. Bank will take out the search report. It will take help of the impaneled advocate to get this report, and it will require the sale deed, gift deed or will, partition deed to ascertain the title of the borrower. So this is not correct. Tax receipt for property are obtained as usually an evidence that possession of property is of proposed mortgager. This is correct. And bank take an opinion from their panel advocate regarding the clear, good and marketable title of the proposed mortgager over the property. This is also correct. So right answer is 2, 4 and 5 are correct. Fill in the blanks and choose the correct answer. Dash give right to the hypothecatory bank to take possession of the goods hypothecated and to sell it without court's intervention after observing certain formalities. In case of pledged goods, Section 176 of the Dash Act gives right of the pledgee bank to sell the things pledged after giving a reasonable notice to the pledger. Dash audits contribute to the improvement in the borrower's management of inventories and receivables. Value of stock is the function of two factors with dash and price. SAFESI Act Indian Contract Stock Quantity, DRT Indian Contract Stock Quantity, SAFESI Act DRT Credit Quantity, DRT Sale of Goods Credit Quantity. Fill in the blanks and choose the correct option, correct answer. Dash gave a right to the hypothecating bank to take possession of the goods hypothecated and to sell it without court's intervention after observing certain formalities. In the case of pledged goods, Section 176 of the Dash Act gives the right to the pledgee bank to sell the things pledged after giving a reasonable notice to the pledger. Dash audit contribute to an improvement in the borrower's management of inventories and receivables. Value of stock is the function of two factors with dash and price. So if we see point wise, this has been given by SAFESI. So SAFESI Act gave right to the hypothecating bank to take possession of goods hypothecated and sell it without court intervention. In the case of pledged good, Section 176 of the Indian Contract Act Dash audit contribute to an improvement in the borrower management. So inventories and receivables are done in stock audit, not credit audit. Credit audit will look after that how the loan was sanctioned, how the assessment was done, whether documentation is proper or not, and it will tell this. The report is handed over to the operational functionary as well as the management and administrative office that what are the things that they need to rectify. Value of stock is the function of two factors. One is quantity and second is price. So right answer is A, SAFESI Act, Indian Contract, Stock and Quantity. Document of title of good has been defined in Indian Contract Act, Negotiable Instrument Act, Transfer of Property Act or Sale of Goods Act. Document of title to goods has been defined in which of these acts? Indian Contract Act, Negotiable Instrument Act, Transfer of Property Act or Sale of Goods Act. So it is defined in Sale of Goods Act. Loan against minor's term deposit can be granted if documents are signed if the minor has completed the age of 14 years. Cannot be granted under circumstances as the minor does not have the contractual capacity. Can be granted to the guardian of the minor if it is for the necessities of the minor. Can be granted only with the permission of the court. Loan against minor's term deposit can be granted if the documents are signed if the minor has completed the age of 14 years. Cannot be granted under any circumstances as the minor does not have the contractual capacity. Can be granted to the guardian of the minor if it is for the necessities of the minor. Can be granted only with the permission of the court. And right answer is C, can be granted to the guardian of the minor if it is for the necessity of the minor. Fill in the blanks and choose the correct option. Loans and advances to any individual from the banking system against security of shares, convertible bond, convertible debenture, unit of equity oriented mutual fund, PSU bonds should not exceed the limit of dash lakh for subscribing to IPO. Loan against security of shares, convertible bonds, convertible debentures, and units of mutual funds from the banking system should not exceed the limit of dash lakh per individual if the securities are held in physical form and dash lakh per individual if the securities are held in demat form. LTV ratio in case of loan against gold jewelry as is dash. So the options are 10, 10, 20, 75, 20, 10, 20, 100%, 10, 10, 20, 90%, or 20, 20, 10, 80%. Fill in the blanks and choose the correct option. So it is 10 lakh for physical form, we can give 10 lakh. For demat form, 20 lakhs. And against gold of gold jewelry, we keep a LTV ratio of 75%. So this is it for today's session. And almost half of January is almost over, and 2-3 months are left for your exams. And as I've always been telling you that you should start early for preparation of your uh, JIB exams, because it usually takes it will take 2-3 months. Some of you might be able to clear it within 1 month if you have some certain background of education, which will help you to qualify the exams, or you get time, because not all the bankers get time and not every banker is equal. So everyone, on an average, everyone will take certain time to qualify or clear the paper. It is better that you start your preparation early. So for starting your preparation with us, you can download the Adda 24/7 app through Google Play or Apple Store. Then you have to go to all courses, go to JIB CIB, and here you will go to JIB May 2025. As you can see that we have launched a new product where you're getting, which is JIB Increment Maha Pack, where you are getting Maha Pack as well as this box. This box contains books, 4 books of all the paper of JIB, where you will get questions to solve. You can practice through them. It will help you for your practice of the exam. For applying, for for enrolling in this course, use the code Y984 and then apply to get the maximum discount. And you can see this is the maximum discount, and this box will be delivered to you at your home. So this box contains not only 4 books, there are other books where you will get what questions has been asked earlier. There is a list of topic, there is planner and some merchandise which is being provided by Adda 24/7. So with that, start your preparation and wishing you all the best. Thanks a lot.